What is the history of the bond market's development? Imagine a world where borrowing and lending were done with simple promises or physical tokens. That's how the bond market's story begins, more than 4,000 years ago. The earliest known bonds date back to around 2400 BC in Mesopotamia, where people used stone tablets to record agreements to repay borrowed goods or money. These tablets were the first legal bonds, creating a formal way to lend and borrow. Over time, these early bonds helped shape the idea of debt and repayment that still guides us today. Fast forward to medieval Europe, especially in Venice during the early 1100s. Governments needed money for wars and public projects, so they started issuing bonds called prestiti. These bonds paid investors a fixed interest rate, making them a reliable way for governments to raise funds. This practice spread across Europe and became a common way for nations to finance their growth and defense. It was the start of government bonds as we know them now. By the 19th century, the bond market grew rapidly with the rise of industrialization. Countries issued bonds to pay for wars and infrastructure like roads and bridges. Cities in the United States also began issuing municipal bonds to fund public works. Companies, especially railroads and factories, started issuing corporate bonds to raise large sums of money without giving up ownership. This period marked the beginning of a diverse bond market that supported economic expansion. In the 20th century, the bond market became more organized and complex. Governments, especially the United States, created long-term bonds with fixed interest payments and set maturities of 20 or 30 years. The introduction of auction systems in the 1960s made it easier for investors to buy and sell government bonds. These bonds became a key part of public finance and investment portfolios, offering stability and predictable income. Later in the century, new types of bonds appeared. The 1980s saw the rise of high-yield bonds, often called junk bonds, which offered higher returns but carried more risk. Investors like Michael Milken helped popularize these bonds by creating complex financial products called collateralized debt obligations. These pooled bonds together to spread risk and increase potential returns. While profitable, these innovations also contributed to financial crises when risks were not properly managed. Throughout its history, the bond market has been a vital tool for raising capital, funding growth, and managing risk. From ancient stone tablets to modern electronic trading, bonds have evolved alongside technological advances and economic needs. Today, bonds remain as essential for governments, companies, and investors to support economic activity and stability. Understanding this history helps us see how the bond market has shaped the financial systems and institutions that keep our economies moving forward.